Hello friends, this is Matt. I'm back again with another pair. This weekend, as you can see, the market is marked as closed, but we have to make preparations for our next week trading. So I'm going to talk about US dollar versus Japanese yen on 4 hours. As you can see, we have a structure here which is a narrow wedge. Okay, so first I have to explain why I connected these lines in case someone needs to learn more about drawing trend lines. Okay, I'm going to talk about the first trend line, which is the upper trend line that we have, which is acting as our support area. The reason why I'm calling it a support line is because the price is wanting to drop, and whenever it goes up, it is going to be supported at the line that I'm calling the support line. So the price needs to go down, but when it goes up, it's going to support at a certain area where I am saying there is a support line which is protecting the price to continue going up. It supports the okay. Then we have the resistance line where the price is resisting. The price is trying to go down, but it's resisting. It's resisting. It's a support area where I put my resistance line. So the price is playing around this area. So let me explain how I joined these two lines together. Okay, first I have two highs at my support area, which is this point where the price hit, and another point which is here. So I had to join these 2 points, which is very important. And at my resistance, I have this first point at the bottom here, and again some bit of hits around this area, and again this point where we can actually see the price has finally broken down through that line. And so what are we expecting on this setup? Like I said, it's called a narrow wedge, and what happens when a narrow wedge is broken? The price we have, as you can see, the price is already retested, but we're not sure yet whether the price will go back inside the wedge or maybe continue going up, or the price will drop from where it is down to around this area. Okay, so let me look at the high time frame a little bit on daily time frame and see what we have. Okay, we have a nice structure at the daily time frame, and as you can see, the price has already started to fall on daily time frame. So we always need to visit high time frames whenever we deal with small time frames. So this is a retest. This is a retest at this point. This is a retest. The price broken through, and as you can see, the candlestick actually closed down below the resistance trend line. So, and a retest, which is that bullish candlestick, which went back to hit our our resistance line. So what will happen from there? The price will probably need to then go down to this area, but we are not selling it right now. What we need to do is to maybe use the pending orders. So what I'm going to do is I'm going to open pending orders as sell stop at this area, just a little bit below the previous around this area. I'm going to put my sell stop at around this area, so that when the price is coming down from the current price, it will go and trigger my pending order, and my take profit will be around close to this area. So the price will probably need to move from this point to this area, and my stop loss will be just a little bit above this horizontal area, which is also the resistance. Like if you learned about the demand and supply zone, this is the zone that is supplying the sellers with what they need. So I'm going to put my stop loss at this point and my take profit around this area. So let's wait for the market to open and see what will happen. So help trading, guys. This is not a signal. This is for educational purpose only. And my name is Matthew. Help trading.